Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the late evening of Tuesday, January 26th, 2021. Thank you for joining me today. And in this video, I'm going to discuss the current technical outlook for gold and the gold stocks. Before we get into it, make sure you subscribe to this channel and also subscribe to my channel at The Daily Gold on YouTube. Thank you. And starting it off, we're looking at my gold bull analog chart. And this chart compares the peak in 1996 to the secondary peak in gold in 2012. And the price action since 2012, as you can see, it's quite similar to what happened after the 1996 peak. Now, it's not exact, no comparison ever is, but it's fairly close. And we're now at the point where gold in 2004, it had a correction consolidation that lasted about 16 and a half months. And that's before, or that was until May 2005. And that's when gold stocks bottomed and had a really strong rebound. And then a couple months after that, that's when gold really started to move and make an impulsive vertical advance. And what's interesting is gold right now is building the handle part of a very bullish cup and handle pattern. So if and when gold can take out 2090, the peak from August 2020, it's very likely to make an explosive move higher. And the measured upside target for that breakout in the cup and handle pattern, there's, depending on how you calculate it, there's targets as high as 3150, then the minimum is 2900. So the next leg higher in this sector, the next sustained impulsive advance, is going to be really significant, really explosive, and that aligns with this analog here. But we are in the handle part of the cup and handle pattern, and that's the bullish consolidation part. And here and now, gold is obviously correcting. And if we look at historically what has been an important support level, that's been the 300-day moving average. And here is the weekly line chart. To simplify it for you, the 62-week moving average is a weekly equivalent to the 300-day. If we look at bull markets in the 1970s and the 2000s, this moving average provided support numerous times. And look, we can even go back in the last couple of years. Even in 2019, it provided support. And then the market bottom, the COVID crash low, was just above the 300-day moving average. And as you can see, we're looking at the cup and handle. If you look at, this 50-year chart, you can see there's a big cup over the last 10 years. So we're building the handle part of that cup. And there's nothing to worry about as far as the market correcting and consolidating. And I say that here in the near term because gold is coming close. It's not really close, but it's getting closer to a potential low and rebound. And so this is a better look with the 300-day moving average. You can see that's at 1753. And the November 2020 low, depending on if you use the tick low, I think was 1760 or maybe 1765. The closing low, I think, was higher than that, maybe 1775, something like that. But you can see there's a confluence of support as the 300-day moving average starts to fill in there. So that's one level to keep an eye on. Now, the realistic worst case would be a test of 1690. There's a lot of things pointing to 1690, so that's another level to keep in mind. But I think the odds are sometime soon we should see gold and gold stocks making a low and rebounding, and we'll know a lot more as far as the prognosis for the rest of the year. But last thing here is if you look at the bottom, that's gold against the stock market, and gold has really underperformed the stock market for a while. And so that definitely needs to turn around. I mean, I think it will turn around soon enough and eventually, but here and now, it's just with that. I mean, there's not going to be an explosive move higher or any breakout in the next couple months. I mean, unless that completely turns around, and I don't see it turning around that fast or that suddenly in the next couple months. I mean, next couple months we got to watch for a stabilization and then a bottom and then a rebound. Okay, now moving on to the stocks. We're starting here with GDX, and we have 3 different breadth indicators at the bottom. Now, looking at the price action, GDX closed right about 35. I'm showing 2 moving averages there. The 400-day moving average, which is in red, and then the 400-day exponential moving average, which is in blue. And if you go back and you look at GDX's parent index, that's GDM on stock charts, and you look at 20 years, in the bull market times, many corrections found support at the 400-day exponential moving average. So that's why I'm showing it here. And the breakout from the previous 7-year resistance level is at 31. Those 2 moving averages are just below 33. They're in the 32s. GDX closed at 35. So what is that, 7 or 8%? I mean, depending on which moving average you use, that's potentially how much downside there is. Now, if you look at the breadth indicators below, the advanced decline line, that's important. That's still showing a negative divergence. So that's something to keep an eye on that tells us that odds are there's probably going to be more selling. Now, if you look at the bullish percentage index, that's at 41%. That's a breadth indicator. We go back to when the Fed shifted policy in the second half of 2018 or at the end of 2018, and you look at the lows in GDX, we can compare those to the 2 at the bottom, which is the percentage of Huey stocks, which are above the 200-day moving average. The GDX contains all the Huey stocks plus some royalty companies. But we can see that's at 20, just below 28% right now. The bullish percentage index, 41%. So, and if you look at the GDX advanced decline line, look at those lows in the last 2 or 3 years and look at how much lower the advanced decline line is compared to its 200-day moving average. So, I mean, based on that, it's getting pretty oversold. Based on the 2 at the bottom, we're oversold, but we're not at the oversold extreme yet. So that's what we really want to see, extremes. And so, again, getting back to the price, $35 support just below 33. If we come down and correct 6, 7, 8%, those breadth indicators are probably all going to be extremely oversold. Now it's the same picture with GDXJ, closed at $50. It has support at 47, 45, we could say. Now look at the 400-day moving average. Look at the blue arrows. This is a significant line of support and resistance for GDXJ. I mean, going back almost a decade. Again, look at the arrows. So it's possible that at some point soon we could see GDXJ test its 400-day, which is coming up close to 45. It's rising, so it should hit that in a number of days. And I'm looking at a couple breadth indicators at the bottom. We have the 50-day moving average and then the 200-day moving average at the bottom. That's the percentage of GDXJ stocks that have closed above those moving averages, currently at 33%, and then the 2% above the 200-day, just below 30%. So again, they're oversold, but they're not at an extreme yet. So if we see GDXJ trade below 50, test 49, 48, then we get to that 47 strong support area. I bet the breadth indicators here will be registering extremes. So that's the story for the stocks. I mean, similar for gold too, but also for the stocks. We're getting oversold, but we need to see a bit more selling. If we get a bit more selling, we'll get to strong support. Breadth will be really oversold, and then we'll be setting up for a rebound. Now, before you close this video, if you have not seen this, you can go to that link. I'll have it in the description. That's a free report on my top stock. This has corrected recently, as most stocks have in our sector, and this is my top pick over the next couple of years. I think this from here has 10-bagger potential over the next 3 years, probably more. This is a very liquid stock. The CEO owns a lot. And so if you haven't gotten that free report, I urge you to do so. Thank you so much for listening to this video. I appreciate it. And be sure to stay tuned because I look forward to doing another update for you in the days and weeks ahead.